Good morning, viewers. Welcome to class. Welcome to cost accounting class. Now, last time we were looking at job order costing and batch costing. I saw some concern. We had looked at earlier on. We had looked at some topic known as contract costing. I saw some concern on some students. They were not properly understanding how we prepare a contract account. And as I promised you in our previous class, that we shall be visiting this particular area again so that we know how we prepare contract accounts. So I want to see that specifically, and then we look at a few questions. After that, I will be giving you more work to do still on preparing contract account. But briefly, what do we mean by contract costing? Now, a contract is a form of specific order costing whereby work is done according to the customer specification, so it is part of job order costing. And one of the main characteristics of a contract is that it will always take more than one financial year to complete a contract. So therefore, one of the main challenges with a contract is that how do we accumulate costs from the point where you start the contract up to the point where the contract ends. Tracing of cost, that is the most important thing. So we normally do that through what we call a contract account. Now, this is what we call a contract account. Simply, I've just summarized it in a very simple perspective. I had already given you this, but now this one is a bit more simpler because I've already summarized some of the things. Now we have two sides. It's one big account. We have the debit side and then the credit side. So on this side is where mainly we have the cost. So we start with direct material. There could be those materials that are coming from the stores. You put them at that point. You could have some materials which you are buying from suppliers. You add to the one that is coming from the store. There could be those materials which are not needed in this particular contract. You sell them. Maybe you sell them to another person who needs them. You deduct. Then the material balance brought forward of material that is at the beginning of the financial year, you add it. You will get the total material cost. You will have direct labor. Direct labor, there could be one which was paid. If there is any accrual, you add so that the total you put it here. And this accrual means that labor which was already incurred, but it has not been paid for. So you add to the one that is already paid so that you get the total. The total figure is this one here. Okay? Then overhead. And overhead could still be paid and we have two, the paid and the accrual. So this one we shall be having paid plus accrual. In the same way we had in the direct expenses. Plant charges, you put them there. Plant, in case the contract, and mostly this one normally happen in first year the contract is beginning. In case you purchased a plant, the cost of the plant is debited here. Now on the credit side, we have the material balance carried down. This one will always be given to you. There is the plant carried down, the value of the plant at the end of the year. Then after that, after you have recorded all that, you balance off your contract account. You add this and this. The balancing figure, whatever you will get, the balancing figure is what we call cost to date. Cost to date. You get cost to date. That's why I've told you, you determine it as a balancing what? As a balancing figure. Next, once you determine the cost to date, you bring it down on the opposite side. This cost to date here. This figure, actually it is this one here. You bring it here on the opposite side. So once you bring it on that side, you record now on the credit side, just below the total figures, these two values which will normally be provided to you. The value of work certified and the value of work not yet certified, excuse me. So after that, you balance off again your account. You balance off your account. You get what we call notional profit. This is again a balancing figure. This figure you get it as a balancing figure. Notional profit. Notional profit. Now, after you get the notional profit, you take it on the opposite side. By the way, we can also have notional loss. It will be on the opposite side. So these ones, once you get it on the profit on the debit side, you get on the debit side, put it on the opposite side. That's why this figure is this figure, which is here. Then on the credit side, on the debit side, you now record these two: the profit taken and the profit provision. Now, what is this profit taken? This is now the most important area now, how we recognize the profit. Remember, there is two-third method, and then there is what we call the whole method, where we don't fraction. Now, in case you are going, I will teach you mainly on how we determine this particular profit. So our main intention, once we arrive at this particular point, how we are going to determine this. Of course, the profit provision is always a balance carried down. So technically, that is how we prepare a contract account. That's the major thing in this particular area, and we shall be looking at how we prepare contract account. So bearing that in mind, I want us to look at questions, some few questions on how we prepare the contract account. Let us have our past paper. I have mine here, and we shall be start. Let's look at May 2014, question number 2B. May 24, no, not May, July, July 2014, question 2B on Mafundi Contractors. Mafundi Contractors Limited. Let us go through the information together and then see what is required of us. So we are told this: Mafundi Contractors is engaged in the construction of a library complex in a college. The following information is available for the year ended 31st December 2013. Tuko na contract price, tuko na material issued from store. You can see now that material issued from store, that is where it will be. Then we have direct labor. Direct labor, here it is. Let's move on. Accrued wages. Wages the same as labor. We are going to add it here. We are going to add it there. Then we have plant installed. Here is the plant that was purchased. That's the cost of the plant. Direct expenses. Direct expense will always be here. And please note that this is just a format. Don't just cram. Any other expense you will be given. I have not just indicated all expenses. In case you have any other expense, it will only be here. Like in this case, you didn't see I did not put direct expense. Here they are. We are going to debit them there. So this is just a format or just a presentation of how it will be. We have material returned to store. If the material is returned to store, it means that it is not going to be used in the contract, and for that reason we just deduct it here. We are just going to deduct it here. So then we have material at site. On which date? 31st Dec 2013. That is the material balance carried down. Here itakuja on the opposite side here. Then we have value of plant at the end of the year. At the end of the year, again here it will be. Then we have value work certified. Work certified tutakuja kuitumia hapa. Then we have work not yet certified here. Then we shall be balancing that. Then we have cash received. Then accrued direct expense at the end. We are going to add it there. Then we are told prepare number 1 contract account, Roman 2 contractee account. Maybe you have not looked at contractee account. That's a simple account we shall prepare. And then finally calculate the work in progress. So I want us to use this particular information so that we are able to see how we prepare the contract account. So allow me to This is question 2B. Now, make your contract account to be large enough because it will accommodate a lot of information. Okay, so that is now my contract account has two sides, debit and credit. Now we are going to have the same case, the same way we had our format here. So let me start with direct material. Direct material. Direct material. Direct material, how much was it? The one that was issued from store. Store. Let me have here down. From stores. From stores. This one is 550,000. We also had material that was returned. Material returned. Hiyo haikutumika kwa contract. Ilirudishwa kwa maybe kwa store. How much was returned from our question? 80,000. Material returned to store 80,000. We are deducting. We are not yet through. Now, is there material that was purchased? I did not see any material that was bought from suppliers. Was there material that was sold? I did not see. So those are the transactions that was affecting material. So, but there was material carried down. Material balance carried down. Material balance carried down. Hiyo nilikwambia, you credit it here. Balance carried down. How much was it? The material balance carried down was 70,000. 70,000. So what is our balance, our total here? Can you use your calculator to do that? Use your calculator to do that. Get that figure here, the net figure for material. The net figure for material. This one will give us 470,000. 470,000. 470,000. Then let us go to direct labor. Direct labor. Direct labor. How much was paid? Ile ililipo ilikuwa ngapi? The direct labor which was paid 480. 480,000. 400. Then there was accrual. At the end of the year, there was an accrual for wages. Accrual for wages was 120. Accrual for wages 120. Accrual for wages 120. How much do we get as our total wage or our total direct labor? 600,000 if we are correct. Let us move on. Direct expense. Direct expense. Direct expense. Direct expense. The one which was paid. How much was paid? Direct 850. 850,000. 850,000. There was an accrual for direct expense. It was the last thing. The last additional information, accrual. There was accrual for direct expense. Accrual. Accrual 150. This one will give us 1 million. This will give us 1 million. There was any other expense? Was there any other expense? Plant installed. There was plant that was purchased. Plant installed. How much was the plant that was installed? The cost of the plant that was installed 5 million. 5 million. Plant was installed at 5 million. There was the value of the plant at the end of the year. I told you that one we credit. So plant balance carried down. How much was this? Plant balance carried down. This one was 3.5 million. 3.5 million. Up to that point, I think we have recorded all the expenses. I don't think there is anything else. So up to that point, I told you now we balance off the contract account. After you have dealt with all expenses, you just balance off the contract account. And our balancing figure will be cost to date. This is the balance. This is the balance. This is the balance. So can we use our calculator? Can we use our calculator to balance off that particular figure? So total balancing figure, this one is 70,000. Confirm whether those figures are correct. Use your calculator. 7,070,000. So what is our balancing figure? What is our balancing figure? Our balancing figure will be the cost to date, which again I think it is coming to 3.5 million. Yes. Sawa. I told you once you get the cost to date, you bring it on the opposite side. So you will have costs to date, balance brought down. This one is 3.5 million. 3.5 million. 3.5 million. Now, we are still following the format of our contract account. So after that, we now record two things: the value of work certified and the value of work not certified. So work certified, how much was it? I think it is 4.5 million. It's already given to us in the question. Then work not yet certified. Work not certified. How much was it in our question? Work not certified. This one is 2.3. 2.3 million. There is nothing else we are adding, so we just balance off again. And then our balancing figure, our balance will be notional profit. Notional profit. Notional profit. So can you use your calculator to do that? This one will be 6.8 million, if I'm not wrong. 6.8 million. So what is the balance? The notional profit, which is the balance. Notional profit. This one is 3.3 million. 3.3 million. 3.3 million. So I told you again, once you get the notional profit, take it on the opposite side. So this one here, notional profit, balance brought down. How much was it? This is 3.3 million. 3.3 million. After that, now we have two things on the opposite side, and this is now where I want you to be a bit keen. We have profit taken, and then we have profit provision. We shall have profit provision. Now, we have two methods of recognizing profit. We have two methods of recognizing profit, and I told you this. in case the question is, that is clearly in our notes, in case the question is not very clear or it's not clear on method of recognizing profit, you use the 2/3 rule method. Now the 2/3 method rule, profit taken, so profit taken itakuwa 2/3 multiplied by notional profit multiplied by cash received divided by value of work certified. Value of work certified. So this one, profit taken will be equals to 2/3. Our notional profit, we already have it. This is 3.3 million. 3.3 million multiplied by cash received. How much is cash received in our question? Cash received in our question is 3.6 million. Over the value of work certified, which was 4.5 million. 4.5 million. So can you use your calculator to get the profit taken? Get the profit taken. So profit taken. So profit taken will be what? I hope it just give you 1760,000. 1760,000. So that 1760,000 unakuja unaiweka hapa 1760,000, and then you balance off. Sasa the profit provision will be our balance. So the total here, this is 3.3 million, and this one is 3.3 million. So profit provision, how much is it? Again, subtract using your calculator. This gives you what? 1540,000. 1540,000. And simply, that is how we prepare. That is the first part, the contract account. The contract account. That is how you should have prepared that contract account. We are not yet through with the question. The part B is asking us to prepare what we call a contractee account. Contractee account. And how do we prepare contractee account? A contractee account is very simple. Very simple. Contractee account. Look here. I will just give you, although we have this in our notes. Contractee account, we have, you debit with the value of work certified. Value of work certified. You put that figure here. Then you will, on the opposite side, that is the credit side, we credit by cash received. And then you balance off, so you will have balance carried down somewhere. So this is how we prepare the contractee account. As simple as that. Repeating, there's no harm when we repeat, isn't it? So anyway, let us now prepare contractee account as per the question. So contractee account. Contractee account. The contractee account, so the value of work certified. Value of work certified. How much was it? I think it was 4.5 if I'm not wrong. 4.5 million. 4.5 million. Then we have on the opposite side cash received. Cash received. How much? Alipatiwa pesa ngapi huyu contractor? He was paid a total of 3.6 million. So balance off to get the balance carried down in the contractee account. So balance off. So I tend to think this will be 4.5 million. 4.5 million. So what is our balance carried down? What is our balance carried down? What is our balance carried down? So this one is 900,000. 900,000. Yes. That is for the first part. Now let us finalize. Let us finalize by looking at the value of work in progress. The value of work in progress. Now, how do you prepare the work in progress? Again, we can repeat here. I hope we are together up to that point. The formula for getting the notion of profit. So how do we get this particular part of work in progress? So our work in progress. So we are going to determining work in progress. Determining work in progress. So we shall have the balance carried down as per contractee account. Contractee account. Sasa hii balance tumepata kwa contractee account. So you add you will add work not yet certified, work not certified. This one is then less profit provision. You less profit provision. Now this will be your work in progress. As simple as that. So let us do that as per our question. So let us now have balance as per the contractee account. Balance carried down as per the contractee account. As per the contractee account, how much was it? It was balance as per the contractee account 900. You add work not certified. Work not certified ni ngapi? Work not certified ni it's given in our question, although we had already used it. It is 2.3 million. And then you less profit provision. Profit provision from our contract account. This one is 1540,000. So can we get work in progress? Can we get work in progress as per our question? Work in progress. If you are keen, you will get 1660. 1660. That is a work in progress. And that is how you should have prepared that question for you to earn a total of 12 marks. That is enough with the first question. So the point I want you to understand here is that if the question is not clear on which method you're supposed to use of calculating the profit taken, you use the 2/3 method. Are we together? So that is how we should have prepared. Question. That question on that particular year. Good.